existing home sales out today, and the numbers are up slightly from a month earlier. Plus, they're up more than 10% from a year ago. That's today's headline, but housing data in general have been pointing in all different kinds of directions. Are today's numbers a true sign of strength for the potential recovery? Well, with me now is real estate attorney Stephen Meister. Stephen, thank you so much for joining us. Well, I'm going to ask the dreaded question. Have we hit bottom yet?
I don't think we're quite ready to say that. I think we're limping along, maybe at a bottom, but the numbers are not nearly as strong as you might think. The nearly 10% increase in the median price that you were just referring to, I think that's...
It looks good.
I think that's more an adjustment to the mix of distressed and non-distressed sales.
Okay, you're going to have to make that simple for me.
Okay, so when you have distressed sales, you know, from the banks and short sales, foreclosures and short sales, those are low priced. When people who aren't in distress, who aren't in foreclosure sell, they get a higher price. The mix of those two changes over time, and I think you're getting less distressed sales, and so the price appears to be going up, but it's not really going up.
Well, that's a little bit scary. So do you think that we're actually still getting worse?
Well, it's hard to say. It's not a commodity like an ounce of gold, so it's hard to say. I will say that the foreclosures, also there's reports out that foreclosure activity is down, but as we were discussing before, that foreclosure activity measurement doesn't include short sales where the banks are letting someone who's in the foreclosure process but hasn't lost their home yet sell for less than the mortgage, and they take less, the bank takes less. They're not counting that as part of the foreclosure sales. And foreclosure starts where the process begins are actually up for 3 months in a row after 27 months of decline.
So we have existing new home sales numbers out tomorrow, which equally have started to improve. Actually, in June, we saw a pretty big drop, but the overall trend has been up. Is there some sort of magic metric I can be watching for? You know, everybody at home says, is now the time to buy? They're trying to pick the bottom of the market. Is it unemployment? Is it the election? What is it?
Well, it's a complex tapestry. I don't have a magic metric for you, unfortunately. I think that you're going to see new home sales in the 500,000 to 600,000 range annually. That's what I think. I think the interest rates clearly being so low are helping that industry. Prices are off. That helps the industry. Prices relative to rents helps the industry. But still, unemployment is high, and that hurts. And the fiscal cliff hurts.
By the way, the higher-end markets seem to be doing all right. Toll Brothers today reported that their profits were up 46%. They beat on all accounts. Look pretty good, actually.
Prices on the higher end are up. You know, some people are doing well, and they're finally getting off their laurels and making some purchases. But I still think there's a lot of clouds on the horizon, let me put it that way, in housing, and I wouldn't be so certain that we've hit a bottom. Yes, it appears to be stabilizing. I'm going to be selling a home soon. I hope that's so, but I don't think we can absolutely call it yet.
All right. Well, is it a good time to buy, would you say? Oh, you're selling a home. You're going to have a biased answer.
Well, maybe. I mean, I bought a home. I think it's a good time to buy, especially given the mortgage rates.
All right. Well, there you have it. Stephen Meister, thank you so much for joining us.
Thank you.